Good morning. Welcome to Forex In Four. Today is Tuesday, October 18th, 2011. Alrighty, once again, we start out with the euro, and I guess we're going to have to start out with the euro every day until we hear something from Eurozone leaders that lets us know that they're removing the risk to the global marketplace. And at this point, we're not there. Just yesterday, we discussed how Germany came out, essentially Merkel and Schäuble, and God, you got so many people involved, you can't even tell who's in charge over there. We know it's Merkel, obviously, but there's still, it's just such a mess the way the whole Eurozone thing's going. And essentially, they came out and said, whoa, everybody slow your roll. Do not expect a plan here by October 23rd. Now, it's interesting. But Merkel and Sarkozy themselves came out and said, well, it's going to be just a week later in the beginning of November. So, I'm not certain what's going on there as far as the time frame goes. But now they're talking, well, it's going to be well into next year. So, this whole Merkel-Sarkozy announcement for the beginning of November, I think people are starting to say, hey, wait a second. This isn't a done deal by any means. And we are probably no further along than we were before. So you can see here, Euro selling off. Yesterday, I put up on the chart of the day, scope it out on the site. But essentially, picking off this short-term trading target here on Euro. All right, that's been fulfilled at 136.75, and it actually looks like we can start to go a little bit lower. Okay, if we back it out and we look at the range that's been sort of happening, all right, you can see that we're going to be able to get some major pullback here. And I think, 136 and back to 135 area are going to be decent things that we're going to see here in the euro as far as target ranges go, because stuff's not quite done there yet. But the big news overnight was actually what China reported. China reported some GDP figures which came in lower than expected. All right, so it wasn't horrible numbers. They were expecting 9.5% year-over-year GDP growth. They got 9.4%. All right, real GDP 9.1% versus 9.3%. All right, industrial production figures though were higher, as were retail sales figures, which shows that the Chinese domestic demand is starting to improve. But nevertheless, that caused some equity sell-off overnight. All right. And that actually caused a little bit of yen strength as well. All right, but you see you're not moving that much. We're just down under 77, and this is from the other day here. This isn't, actually, no, this is last night's move. But if you take a look here, we can look at Euro Yen. All right, you're going to see that that's done a little bit of selling there as well. So Euro Yen starting to come off. All right, we've got risk aversion going on in the markets because the Chinese economy slows. Whoa, that's going to take everybody down. And we can also look at Aussie. Okay, Aussie USD, you can see there's the move right there. That Aussie is very much tied to China. All right, China is the largest importer of Australian raw materials and exports. All right, so Australia and also the Kiwi as well. Now, it was interesting, but in New Zealand, all right, they said, hey, wait a second. All the additional growth they've been getting thanks to the rebuilding efforts after the two earthquakes they experienced earlier this year are actually, starting to jumpstart the economy, which, months ago I said it would, and there's always a silver lining in every bad scenario, but looks like they can remove stimulative measures. All right, and then we got the Australia, the RBA's October minutes. All right, and they said that they're going to keep an eye on inflation, and that they're comfortable where they are right now, so we'll have to see what happens. But getting back to the euro, we also had the German ZEW economic surveys come out, all right, and they were basically at 3-year lows, so they are not excited about the current conditions in Europe right now. They're expecting a negative 45. They got negative 48.3 of economic sentiment, and that's not a good thing. Now, we haven't even discussed the pound yet, but let's get right to it. Okay, you can see here. Okay, pound off, despite the fact that CPI figures came in at 5.2%. I mean, this essentially puts us back at 2008 levels. All right, they were expecting 4.9%, and I got to tell you, I saw that yesterday. I thought, no way. I said 4.9%. There's no way. This must be wrong. The market couldn't be expecting 4.9%. Well, not only did they get 4.9%, they get 5.2%, which means that inflation is pretty high over in the UK. And all you hear the Bank of England saying is that, oh, it's going to abate, it's going to come down. The austerity measures are going to take this thing down. It's going to go lower. And guess what? It's not happening. All right, it hasn't happened. They've been outside of the Bank of England's target range for some time. My God, it's 2% is what their target range is. All right, we're more than double that. We're 2.5 times that, and then some. All right, if it's over 3%, they have to, the Bank of England guys, to write a letter to the Chancellor of the Exchequer explaining what's going on. Well, I don't even know if they do that anymore. I think it's just becoming part of the new normal over in the UK that we're going to try and encourage inflation to balance a slowing economy, and You tell me what that adds up to. Inflation plus slowing economy. That's right, stagflation. That's exactly what it is. And they're starting to see it here in the UK. And it's interesting because the UK has sort of been out in front of this whole thing. I mean, people have been saying, oh, they're taking the wrong tack over there with austerity measures and things like that. Well, you know what? They might not be. It's maybe here in the US that's got the problem. Right, because we continue to add to our deficits in the same sort of environment. So, we're heading more towards Japan, and I think the UK is while they're experiencing temporary stagflation, all right, there's going to be a point here that they're going to have to do something. But you can see the pound pulling back as well. And this is all part of, what we're seeing here as risk aversion. Okay, we've got markets lower. All right, Asian markets were down overnight thanks to Chinese GDP miss. All right, then we had European markets that they, tacked on lower. All right, U.S. markets are actually, they're lower, but not to start the morning, futures, but not that much. We're starting to get bank earnings coming this morning. Citigroup just reported, so goofed up number. I don't even know how to report it, but the estimate totally missed, but it was higher. Revenues were up, but other things were missing. It's you can't even get a good report anymore. There's so much confusion going on with the banks, and as far as these Occupy Wall Street people go, they're right about a lot of things. Their message is misguided, but listen, we need to have some sort of fixes here. So what's going to happen later today in the U.S. here? We're getting PPI figures that are going to come out. We're expecting 6.4% year over year for the month of September, 2.4% ex food and energy. So you can really see that food and energy component. It's kind of big, right? And that's unfortunate because food and energy is something everybody needs. I don't care where you are in the economic spectrum, whether you're rich, poor, or whatever. Obviously it hurts people who are lower income than it does higher income because food and energy is something that's fairly static across the board. And that's where, that inflation gets to be very insidious. And, you're going to see it in the UK, all right, but here especially. And, that's why you get this anger. And I think that, right now, Washington, D.C. is basically, they've mailed it in and it's over. We're in full-on election mode right now. Don't expect anything to get done. We've got the super committee coming up who may be able to hit the minimum target balance that they're looking for in deficit reduction of 1.2 trillion. All right, people are saying, oh, we'd love to see them get to 4. Well, let's get to 1.2 first and then see what we can do from there. But this is essentially, we're setting up the showdown. You see the anger, and this is basically turned into class warfare here in the U.S. And people say, oh, it's the rich versus the poor. No, what it is, it's those with jobs and those without jobs, and that's something that I understand. It's unfortunate, but for example, I feel very lucky to have a job in this environment. But I'm not a Wall Street banker. I don't make a ton of money where I'm going around, flipping Hyundais out for lunches and things like that. All right, but nevertheless, I want to have the ability to get ahead. All right, I've taken on some debt along the way. I've done a lot of other different things that it would be nice if the door doesn't get closed on me. All right, but here we've got this class warfare thing set up, and it all comes down to the Washington D.C. inability of politics to put together proposals that are going to actually cause people to be hired, and that's unfortunate. So we're going to see some economic malaise for a little bit here, but the PPI number is going to be interesting because it's going to give us an idea of where we are in the inflation debate. Now, Bernanke's going to speak later today, and I imagine he's going to sort of shift the focus over to Europe to kind of disguise what's going on here. But, I think that we're sort of heading towards a stagflationary environment as well. All right, if we can get through this European mess, all right, then I think that the natural outcome is going to be inflation. If you think about all the money printing that's gone on and where inflation's already starting to show up. We know about it in the emerging market countries. Now we've got it in the UK. All right, it's actually starting to pick up in Europe a little bit, but they've got such a mess going on over there, insofar as the different countries who've got to take on austerity. That it's interesting to see that this may be the kind of thing where this could explode global inflation. Depending, but right now the when I look at some of these charts, it looks like people are expecting that this euro thing's not going to be a done deal here in the next couple of weeks, and if that happens, all right, that could cause a deflationary spiral. So you can see how we're like, it's right, you're on this tipping point, and it's like, where are we in the debate? And I think that's the problem, is that nobody really knows, right? It's like you can't get a good read on it. I mean, you can't even believe the numbers that you see, and you think about it, it's like, wait a second, they've got inflation here, inflation here, inflation here, but we don't have any in the U.S. How do we not have inflation? Well, because of the housing market. That housing component drags down, all right, all the gains we see everywhere else. All right, food and energy are higher, all right, but homes are down and home prices are going lower. And until they figure out the housing problem, all right, everyone else is going to pay for it in the form of higher gas, higher food costs, that sort of thing. Unless, of course, the economy just declines so much because we have no solutions in Washington, and we get uptick in unemployment and not downticks. All right, then all of a sudden, we could be in for a deflationary spiral. So, all the money out there, if the banks aren't lending it because the economic conditions look so bad, then I guess it doesn't matter what interest rates are, right? So, interesting times, folks. But again, we've got this backdrop of what's going on in Europe. The U.S. stock earnings, as I said, I think stocks really want to go higher here, but it's just the environment's too difficult right now. But should we get some sort of clarity, we could see a move up. So that's what we're looking at with the pound. And lastly, I just want to show you gold. Wow, gold tanking along here. All right, I called this one on Monday. All right, we said it was a little bit of a bull flag going on here. All right, and 1640 is the number. So if we close below 1640, all right, we could see a move back down to about 1400. All right, you can see that we've got this just stochastic here. It just came off of overbought. Now we're starting to roll back towards oversold. So this could be a big move coming up. So anyway, gang, that's what I've got. Keep your eyes on the risk in the markets. All right, stocks were down big yesterday. Let's see if they can come back to positive today. But right now, I don't have high expectations for much. So that's what we're looking at. Good trading to all.